If you own a property in Orleans Parish, your 2026 tax assessment just arrived, and there's a real chance that the number on that letter is wrong. Not slightly off, I'm talking meaningfully wrong, in a way that costs you hundreds or even thousands of dollars every single year. And if you moved here from out of state, you're most likely the person to pay that bill without ever questioning it. I'm Margaret, born and raised right here in New Orleans, and I've been walking clients through this exact process for years. By the end of this video, you'll know how to read your assessment, spot an overvaluation, and file an appeal that actually works. So let's start with what actually changed in 2026 because the numbers shifted more than most people expected. What the 2026 reassessment actually did. Orleans Parish reassesses property every 4 years. That means 2026 isn't a routine adjustment, it's a full reset. The assessor's office went through every property in the city and recalculated fair market value from scratch. The last cycle was 2022. And a lot has happened in this market since then. The way the assessor's office arrives at fair market value depends on the property type. For most single-family homes, they use a sales comparison approach, pulling recent sales of similar properties nearby and using those as a benchmark. For rental properties, they typically apply an income approach, estimating value based on what the property generates in rent. For unusual or historic properties where there aren't enough comparable sales, they fall back on a cost approach, basically what it would cost to rebuild this structure today, minus depreciation. Each of those methods can produce the wrong number, and we'll get into exactly how and why in just a minute. First, let's talk about where values moved the most. Across the city, neighborhoods like Broadmoor, Gentilly, Bywater, and Mid-City saw fair market value increases in the range of 15 to 30% compared to 2022 assessments. Some individual parcels came in even higher. That's a significant jump, and for a lot of homeowners, it was a surprise when the letter showed up. Now here's why out-of-state buyers are especially exposed. If you purchased in 2023 or 2024, you likely paid near the top of the market. The assessor's office sees that sale price in the public record, and in many cases, they have used it as the primary basis for your 2026 fair market value, or in some cases pushed above it using cost or income adjustments. That means buyers who already stretched to get into this market are now being taxed as if their purchase price was a floor, not a ceiling. Understanding how the tax bill actually gets calculated matters here, because fair market value and your tax bill are two different things. For a homesteaded residential property, your assessed value is 10% of fair market value. So a home assessed at $400,000 fair market value comes to $40,000 assessed value. From there, the homestead exemption removes $75,000 from the fair market value before that 10% is applied, but only if you've filed for it. That exemption is worth roughly $750 to $1,100 a year, depending on your millage rate, and a surprising number of out-of-state buyers who closed in 2023 or 2024 never filed it because nobody told them they needed to. If that's you, fixing it is step one, and it's completely separate from the appeal process. You've got a reassessment year driving values up sharply across whole neighborhoods, a calculation method that can go wrong in several different ways, and a homestead exemption that many new owners missed entirely. Any one of those issues alone can mean you're overpaying. Together, they add up fast. Now let me show you what an overassessment actually looks like on paper. What overassessment looks like. Let me walk you through 3 real situations from 2026 assessments. Details anonymized, but the numbers are accurate. And first is an out-of-state buyer who purchased a home in Gentilly in late 2024 for $320,000. When the 2026 assessment arrived, the assessor had pegged fair market value at $340,000. On the surface, that might not sound outrageous. Values did rise in Gentilly, but we pulled the comparable sales sales within a half-mile radius that had closed in the 6 months before the assessment date. The picture looked different. 3 similar properties, same bedroom count, same approximate square footage, same street typology, had sold between $295 and $310. The market had actually softened slightly from the peak. The assessor used the client's own 2024 sale price as the anchor and adjusted upward from there, without accounting for the fact that the sales in that pocket had cooled since then. The corrected fair market value based on those comps came in around $305. That's $35,000 difference, translated to roughly $700 in extra taxes every single year. And the owner had no idea until we sat down and looked at it together. The second example is a double shotgun in Broadmoor, a classic New Orleans property type, 2 mirrored units side by side under one roof. The assessor applied a cost approach, estimating what it would cost to rebuild the structure, then backing out depreciation. The problem was the depreciation calculation. The assessor used a standard schedule without any adjustment for actual condition, and this property had real issues: a foundation with measurable settlement, deferred maintenance on the roof, and original windows that hadn't been touched since the 1970s. None of that showed up in the assessor's record. When the owner commissioned an independent appraisal for $400, the certified appraiser documented the condition in detail, applied the appropriate condition adjustments, and arrived at a fair market value roughly $45,000 below the assessor's number. At current millage rates in Orleans Parish, that gap cost the owner over $800 a year in taxes they shouldn't have owed. The third case is a rental property where the assessor used the income approach. To do that, the assessor has to estimate gross rental income, apply a vacancy factor, then capitalize the net operating income into a value. The assessor's office used area rent data that reflected not actually rents. This particular property had been leased to the same long-term tenant for 3 years at a rate about 18% below current market asking rents. Completely reasonable. Very common in New Orleans. The actual lease documents told a completely different story than what the assessor assumed. When the owner submitted the executed lease, the utility bills, and a simple income and expense summary, the income approach recalculated to a fair market value about $52,000 lower. That's over $1,000 a year in taxes gone. What all 3 of these share is simple. The assessor's office is working at scale, processing thousands of properties at once, and they don't have visibility into condition, into your specific lease, or into the fact that the comps shifted after your closing. They're not making these errors maliciously. They just can't see what you can see. And in every one of these cases, the owner had no idea until they actually looked at the number. So how do you know if your number is wrong? Here's exactly how to check it. How to read your assessment and spot the error. Start at the Orleans Parish Assessor's website, nolaassessor.com. Search your property by address. What comes up is your property record, and most people have never looked at it. That's the first problem. Pull it up right now if you can, because the fields on that page are where the errors live. The number you want first is fair market value. That's the assessor's opinion of what your property would sell for on the open market as of January 1, 2026. Write it down. Then look at the assessed value directly below it for a homestead residential property. That should be exactly 10% of fair market value. If the math doesn't check out, that's already a flag worth pursuing. Next, look at how the record splits land value from improvement value. Land is the lot itself. Improvement is the structure. In some overassessments, the improvement value is inflated because the assessor used a cost calculation that didn't account for age or condition. In others, the land value jumped because a nearby commercial sale skewed the land comps. Knowing which number is wrong tells you which argument to make. Then check the property class. In Orleans Parish, class codes determine which method the assessor uses and what exemptions apply. A property coded incorrectly, say listed as commercial when it's residential, or listed as non-homestead when you live there, can throw the entire calculation off. Confirm your class code matches your actual use. Square footage is where some of the most straightforward errors show up. The assessor's record will list building size, and that number comes from permit records, old surveys, and field measurements that haven't always been updated. If your record shows 1850 square feet and your closing documents, your appraisal, or your floor plan shows 1620 square feet, that discrepancy alone can support a meaningful reduction. Pull out your closing disclosure or your little survey right now, or your title survey right now, and compare. If there's a photograph, your rooms, document the actual dimensions and put that in your evidence packet. Once you've reviewed the record itself, the next move is pulling comparable sales. You're looking for properties that closed within roughly 6 months as of January 1st, 2026, within about a half mile of your address with similar square footage, bedroom count, and property type. The NOLA property search tool at nolaassessor.com lets you browse sales data publicly. Your agent can also run a proper MLS pull with tighter filters. That's exactly the kind of thing Bernard and I do for clients when they get their assessment letter. When you're pulling those comps, pay attention to equity across your block. Your property doesn't have to be overvalued in absolute terms to have a valid appeal. It just has to be valued inconsistently with similar properties nearby. If 3 houses on your street with comparable size and condition are assessed at $280,000 fair market value and yours came in at $330,000, that inconsistency is its own argument. Louisiana law requires uniform treatment across similar properties, and the Board of Review takes equity arguments seriously. One more thing worth checking. If you have a homeowner's insurance policy, ask your agent what the replacement cost estimate on your dwelling coverage looks like. If the assessor used a cost approach and arrived at a rebuild value significantly higher than what your insurer calculated for the same structure, that's a useful data point to include in your evidence. It won't carry the same weight as a certified appraisal, but it adds texture to the condition or cost argument. Once you've spotted the problem, the next step is building your case, and the window to do it is short. The appeal process, step by step. The appeal window in Orleans Parish opens when assessments are published. The assessment rolls are open for public inspection from July 15th to August 15th, and appeals will be accepted through August 20th. That's it. Miss that window and you're locked in at the current value until the next reassessment cycle in 2030. So before anything else, find out when your window opens and put the deadline in your calendar today. Appeals submitted online will be reviewed by the assessor's appraisal staff, who may request additional documentation or propose settlement agreements on property value. Appeals not resolved at this stage will be forwarded to the Orleans Parish Board of Review, which is the City Council, for a settlement hearing with their appraisal contractor. Here's how the process actually works, step by step. Step 1 is building your evidence packet before you file anything. You want recent comparable sales, ideally closed within 6 months of January 1st, 2026, within a half mile of your property, similar size and type. If you bought recently, pull your closing disclosure. The assessor's office will often respond immediately to a well-documented purchase price argument when the comps support a lower value. If condition is your argument, take photos now. Foundation cracks, roof wear, deferred maintenance, and get written estimates or inspection reports if you have them. If you're working a rental property case, gather your executed lease, rent payment history, and a simple income and expense statement for the past year. The more concrete your packet, the less work the reviewer has to do to see your point. Step 2 is filing through the Orleans Parish Assessor's online portal at nolaassessor.org. There's a formal appeal submission interface, and you'll fill in your property address, your contact information, and the specific grounds for your appeal. You'll select whether your argument is about fair market value, equity with neighboring properties, or a factual error in the record, things like wrong square footage or wrong property class. Then you upload your supporting documents directly. Keep your file sizes reasonable, label everything clearly, and submit before the deadline. Print or save your confirmation number. Step 3 is the informal review. After you submit, a staff appraiser from the assessor's office reviews reviews your packet and either accepts a corrected value, proposes a partial adjustment, or holds the original number. This is where clean, well-organized evidence wins. The reviewer is looking at dozens of cases. The ones that move fastest are the ones where the comps are clear. The argument is simple and the math is easy to follow. Don't overload the packet with irrelevant material. 3 strong comparable sales beat 12 weak ones every time. Step 4. If the informal review doesn't resolve it to your satisfaction, you escalate to the New Orleans Parish Board of Review. This is a short hearing, not a courtroom, not a deposition. You present your evidence, you explain your position, and the board makes a determination. Bring printed copies of everything. Speak plainly about what the record shows versus what the actual market data shows. If you've retained a certified appraiser or a property tax attorney by this point, they can present on your behalf, and for a gap of $40,000 or more in assessed value, that's worth considering. A local appraisal typically runs $300 to $600, less than 1 year's savings if the appeal succeeds. Step 5 is the Louisiana Tax Commission, and most cases never get there. If the Board of Review doesn't resolve it, you can file with the LTC, which is the final administrative step before district court. The process involves a formal submission, a scheduled hearing, and a written decision. Property tax attorneys handle this level regularly, and if the numbers justify it, the commission hears arguments from the state on exactly these kinds of valuation disputes. The most important thing to understand about this whole process is that it's designed to be accessible. You don't need a lawyer to file an informal review. You don't need an appraiser to submit comparable sales. What you need is accurate data, a clear argument, and the discipline to meet the deadline. And once your appeal is done, whether you won or not, there are a few things you should do right away to protect yourself going forward. Protecting yourself after the appeal. Let's start with the homestead exemption, because if you bought in 2023, 2024, or 2025 and never filed it, that's the fastest money you can recover. The deadline is December 31st of the year you purchase. So if you miss it at closing, you need to file as soon as possible and ask the assessor's office about backfiling options. At current Orleans Parish millage rates, that exemption is worth $750 to $1,100 off your annual tax bill. It doesn't happen automatically. You have to walk into the assessor's office or file through the portal with your ID and proof that the property is your primary residence. One trip, one form, done. Beyond the homestead exemption, there are a few others that go almost completely unused because nobody talks about them. If you or a household member is 65 or older and income qualified, the senior freeze locks your assessment at its current level permanently, meaning future reassessments can't push your taxable value higher. That alone, compounded over a decade in a rising market, is a serious amount of money. There are also disability exemptions, and for owners of qualifying historic structures, a partial exemption tied to the certified rehabilitation of historic fabric. New Orleans has more eligible historic properties than almost any city in the country, and a fraction of owners take advantage of it. If your property is in a historic district or carries a local or national historic designation, it's worth a conversation with a property tax attorney about whether you qualify. Here's something people consistently get wrong after a successful appeal. They assume the correction carries forward automatically. It doesn't always. The assessor's office updates your record when a formal determination is made, but errors have a way of reappearing, especially in properties where square footage or condition adjustments drove the original reduction. Set a calendar reminder for when the 2030 reassessment cycle opens, and check your record again the moment those values publish. You can also appeal any year your assessed value changes, not just in reassessment years. So if you see an unexplained jump in an off year, don't ignore it. One more angle worth addressing is the relationship between your assessed value and your insurance coverage. These two numbers are calculated differently. The assessor is estimating market value. while your insurer is estimating replacement cost, but they should tell a story that more or less makes sense together. If your assessor is using a cost approach that puts rebuild value at $420,000 and your dwelling coverage is set at $280,000, that gap is a problem in both directions. It may mean your insurance is underweight, or it may add credibility to an appeal argument that the assessor's cost calculation is inflated. Either way, it's worth a conversation with your insurance agent to make sure these numbers are aligned with your actual property. For anyone who moved here from out of state, all of this is exactly the kind of thing that doesn't show up in a Google search the week before closing. It's institutional knowledge, and it takes years to accumulate. That's why Bernard and I try to bring every client relationship, not just finding the right property, but making sure you're protected after the keys are in your hand. If you want us to pull your assessment record and run a quick comparison against current comps, reach out directly. Our contact info is in the description below. So here's what to do right now. Go to www.nolaassessor.com property search. Pull your property record and write down your fair market value. Then pull 3 comparable sales from the past 6 months and see if the number holds up. If you bought in 2023, 24, or 25, your 2026 assessment deserves a hard look. Don't assume it's right just because it arrived in an official envelope. File before the appeal window closes, because that deadline is firm. If you want help with any part of that process, Bernard and I are right here. All of our contact info is in the description. Hit that subscribe button and tap the notification bell so you never miss our next video. We had planned to film the Clipper Estates tour yesterday, but the rain had other ideas. So that one's coming soon. In the meantime, we're dropping Can You Really Keep Your Boat Behind Your House in Louisiana next. And if you're thinking about life on the water here, you won't want to miss it.